Hey everyone, welcome back to another video. I've been busy and I was unable to record my trades and also take trades. So I have not been trading for long and now I'm back and I have updated my model over time. So I'm going to give you an insight of that. So just let's begin. I am going to keep this video short. So the model is pretty simple. First, we're going to look for a key level like a buy side liquidity, sell side liquidity, equal highs and lows, and session highs and lows. These three things we're going to look for key levels. No FEGs for key levels. We only look for highs and lows for this model. And also, we want the model, like we want this liquidity sweep. For that, we just need the wick. I don't want to see a body close above that. Like if there is this important key level, and if the body closes like this, I'm not interested. Or um, excuse like this, I'm not interested. I want the wick to be wick to sweep the liquidity, and it should look something like this. And of course, you're gonna ask me now, how is this gonna happen every time? So it happens. You just need to look for it, and it happens in 15-minute time frame and higher time frames. You can't find these things in lower time frame. It's kind of impossible. So we always take the higher time frame for this, and let's just jump into the model state. What I mean by the obvious IFVG on lower time frame, I'll explain you in the chart itself. If you have watched Dodgy's video, you might get the idea what I'm trying to say. But let's just jump straight into it. So this is September to 9:15. It's 9:30. Okay, here it is 9:30. So all the trades we are going to take is after 9:30 New York session. And what we see here is the first thing, liquidity sweep. Like I said, we only take wicks here, but you can see bodies. So let's go to 30 minutes. This is what I mean when I say liquidity sweeps by just a wick. You can see right here how it swept the liquidity without getting the body above that level. So if you see this liquidity sweep, we are just going to switch to 1 minute or 3 minutes or 2 minutes, whatever you like. Here it is, the liquidity sweep. And look at this value gap. It's in this leg, it's very obvious, like from here to here, here to here, it's very obvious, and it's not so big and not so small. That's what I like to see when I look for inverse fair value gaps. It should not be the like very big or too tiny. So this was just perfect in this price leg. And also you can call it an abnormal FVG, because if you look here, everything small, small. This is a big FVG. Same here. So we took this as an inverse and we broke through it right here, shorted. You can adjust your, sorry guys, I'm not well. You can adjust your SL according to you. I kept it the body. I suggest you guys to keep your SL on the wicks because sometimes you might get saved by the SMT. And if you take the wicks, I mean, if you take the bodies, that's not the same case. And yeah, you can target the lows. And one more thing, this model doesn't guarantee a fixed risk to reward ratio. Sometimes you're gonna get 1 hour, sometimes two, sometimes more. So it's not about the risk to reward ratio. You just have to target the opposing liquidity. So here, this was it. You can see as it goes much more lower, you can get 4 hour and more, but the model says, the rule says the opposing liquidity which is here. So I think you have the idea now what I'm trying to say. So let's move on to the next one. So Tuesday, we just fell. We had nothing. So we are going to just ignore this. And let's move on to the next day. That's 4 September. And there was a liquidity sweep. And you can find equal lows right there. But for the safe side, I took this one. There's a liquidity sweep right there with the wicks. Let's go to the 1 minute. Okay. So there was also this trend line, but it is not in the model, so we'll ignore this simply. Okay. So if I remove this all, can you guys find a obvious FPG that can be inverse or we can take a trade-off? It's very simple. We have this big FPG, news candle. Like now you're gonna say earlier I said that we don't take two huge FPGs, but if you see in this leg, we don't have any other. We swept liquidity in here, and in this leg we don't have any other FPGs to be obvious. In this leg, we don't have any FPGs that can be disrespected, so we have to take this one. That's the FPG. Okay. This is the point where you all gonna take longs and select the lows and target the highs. What high you may ask? So let's just target this one. 1:5 hour. If we get, if we just trail the bodies right there, we might get a 1:2 hour almost, but okay. If you guys should have holded it, you can obviously get 2 hour easily, but okay. The model says the opposing liquidity, there it is. Moving on, what do we have on Thursday? Okay, Thursday is a little bit tricky. What I mean by that is, I'll let you know. So let's remove this. That's an high. Okay, that's the liquidity sweep. Use now I think what is the catch here? I'll tell you. And what is this? This is an order block in 30 minutes. You will you will get to know soon. Let's just go to 1 minute and see what happens here. We have the fair value gap, but that's a loss. How you may ask? Well, first of all, if you go to the 30-minute time frame, what we see is this fair value gap. Also, this fair value gap also aligns with this candle which made us lose the money. But if we look to the left, we see this order block right here. And if you ask me, that was a good loss. Okay, that's an acceptable loss. We followed our rules, everything. We had an FPG, we had a high probability setup, so that was a good setup. So why did we lose our money? The reason behind that was the order block on the left, and that made it more strong liquidity. So that's what we swept, and there it is. We took this. It was a 2 minute inverse FPG. We have this is the point where we took short SL right here and 2 hour, more than 2 hour. We took this low. So that was this, and let's see if I have something more to show you guys. 2022 model, sorry, inverse FPG model above 2022 model. And if I don't have that inverse FVG setup, I usually take the 2022 model. And here we have the liquidity. So in 15 minutes, let's go to 1 minute and let's see what happens. We set liquidity, no proper and obvious FVG that we should have traded right there. You can see this one, too small. See this one, too small. So this is the place where we have to go for the 2022 model, market structure shift, the value gap, tap entry, or else you can take this imbalance right here, this one, and you can go for the inverse fair value gap entry. The entry would be like this on the VIX and with liquidity. Here we don't have one. Yes, that should be stick with this 1 hour. If you keep the stop loss in the bodies, you get look at the bar actually. Okay, let's say it's just a 1 hour. Okay, that's it. And if you go and further than that, that's the last setup I'm going to show you. I wanted to tape read the whole month, but that will just make the video too long and boring for you guys. So I just skipped it. There you go. I think this is what I actually took. I mean, I took some of this, not everything, because I didn't trade, but I think I took this one. Equal lows, liquidity sweep with the VIX, 1 minute, 9th of Monday, September. I don't think this was the one. Was this the one? No. Oh, I missed one. Yep, I missed this one. Let me explain this. It was on Monday. The trade which I took was on Tuesday. Let me show you the Monday trade first, and you can go forward. It is too small to see. Yep. This was the 2022 model. This was the IFVG model, and this is the one which I took. So this one, simple liquidity sweep with the VIX and drop down to the 1 minute. This is post like PM session trade. Liquidity sweep, IFVG. This is just too common IFVG if you may say. So let me tell you. In this whole leg, that's the only proper big and obvious FVG. So that was just obvious to take it. This FVG, we broke below it, and you can go for this one. Then go for this one. Keeping in this highs, or you can go in the retest and the FVG, which that's a breaker, I guess. Yep. You can go in this unicorn thing. That's a 2 to 3. Like I said, this model doesn't guarantee you a fixed risk to reward ratio, but it has a high win rate, so that can cope up with the flaw. It's good. I already showed you the 15-minute sweep, so I'm just going to show you the 1 minute for this one that I took. So what happened was there was this FEG which is valid to take because still, like I said, no other obvious FEG in this leg. And if you're not so sure if you should take it or not, if you see this pool right there and think it might give a secondary sweep, so just wait. You get more confirmation. So what you have here is this big 2 minute FVG, and just wait for it to broken. And there it's broken. There it gets broken. You can long from there, targeting the highs, or you can just target this high. If you're too crazy, you can target this high and get a 4 hour easily. So I think I will wrap up the video right here. Showed you so many examples and the model. I will make a more detailed video about this model if you guys would like. So just let me know in the comment section so I can maybe elaborate this model for you guys. But I think this is the end of this video, and I'll see you guys in the next one.